lost. Yeah, I don't even know what it costs. Yeah, I hit the ground and it go off. Yeah, hit the ground and it go off. Yeah, run it. Ooh, I really feel it's my time. Think it's my year. Yeah.
Good morning and welcome to the best morning show in finance. I'm your host, Steve Strazza. It's not just Friday, it's Crypto Friday. We got Tesla news, GM news, we got earnings news. David Lundgren is on at 9, Kimmy at 9:15, Ian at 9:40. Heat are playing game 4 in Miami tonight. JC's back. This is the morning show. Let's go.
Yo, we are back. Did you miss me?
I missed you, buddy. I always do.
You know, a few days. I got to tell you, Baltimore is a great town. Underrated town, Baltimore.
Tell me why you love it. Let's talk about it.
Well, I don't go to like 99% of Baltimore. I kind of hang out in Fells Point a little bit, you know. Sometimes I'm in that, what's that other area? Mount Vernon is a nice little area there. Some nice, little wine bars and things like that. Man, great food. I had crabs. I had crab cakes. I had sushi. There was just so much seafood. It's like such a great couple of days. I just got to tell you.
I figured you would eat well there.
Ask Spencer's. Baltimore with JC is good Baltimore, I think.
So you did the soft shell crab. Tell me all the different ways you did the crab. You did the soft shell.
I did soft shell crab. I had crab cakes.
Yeah.
I had crab legs. I had for lunch yesterday. We had some kind of crab that was deep fried. They looked like Cheetos. There was crab in it, but they were like Cheetos. It was fantastic.
I don't want my crabs to taste like Cheetos, but all right, to each his own.
Listen, I didn't order it. Somebody else, a local, ordered it. He's like, JC, try this. I said, okay, these are delicious. It almost tasted like if it was like king crab inside of a Cheeto.
I don't know.
Nice little dipping sauce.
I'm bearish. Cheeto crabs.
Listen, you come to Baltimore with me. You're gonna eat well, my friend. You're gonna eat well. Oh my God, I had these lamb chops on the other night. It was fantastic. We'll talk about it at recess. Let's get into the market. We got more important things to talk about.
You've had time to look at charts. You ready to go? You ready to do some state of the markets?
Do I have time to look at charts?
Yeah.
Who are you talking to, bro?
Let's.
All right, so everybody, happy Crypto Fridays. Before we get into some of the cryptocurrencies, let's take a step back and let's sort of talk about, the type of market environment we're in. I think this gets lost. A lot of people most investors in my experience, myself included early in my career, just completely forget to identify the type of market environment we're in. Are most stocks going up? Are most stocks going down? Are stocks going sideways? How are interest rates affecting things, right? First, we want to identify what type of market environment we're in. And then, and only then, do we pick and choose the types of tools and strategies that are best for that type of market environment. You got the volatility index hitting 3-year lows? So if volatility is hitting 3-year lows, Strazza, should we be incorporating strategies that are good for high volatility environments? Probably not, right? No. Probably not. And in bear markets, what happens in bear markets? The majority of stocks are going down. More stocks are making new lows. New sectors are participating to the downside. Those are bear markets. Is that the market environment that we're in right now? Should we be taking advantage of the strategies that are good for that environment? No, we haven't been in one of those environments in almost a year. By the way, next week is the 1-year anniversary of the day that the new 52-week lows list peaked. That's next week. So, right?
I was thinking the same thing the other day. Yep.
Time flies in bull markets, and what's really interesting is that you have so many investors that I guess somehow convince them, maybe they're looking at their charts upside down, I don't know, but they think that we're in a bear market. JC, when is this bear market going to end? I was with some market participants that are not in our crew over the last couple of days, and boy, were they pessimistic still. Meanwhile, you got the S&P and the NASDAQ making new 52-week highs. You got the most amount of new 52-week highs since like February or something. I got people telling me the market peaked in April. I don't know where they're coming up with that number, but that's just not the case. So I want to show you slides number 3 and 4 here. We're looking at the New York Stock Exchange, percentage of stocks making new highs, and then we're looking at the same thing with the NASDAQ. If this is in fact a bull market, an ongoing bull market, what should we expect to see next? We should be seeing an expansion in the new highs list, a new 52-week high in the amount of new 52-week highs, if you will. That's what would be next. I think that if the rotation into some of these cyclicals, like industrials, continue to progress like we've seen over the last, week and change or so, I think that's going to be the catalyst to spike up the new 52-week high list. And I think it's coming. And it's perfectly normal. If you punch up slide 2 there, Fonz, this is a perfectly normal time in the market cycles for stocks to do well. It's a pre-election year. After the midterm election, stocks historically do very well. This time is no different. So I don't know why everybody's like so surprised that stocks are doing so well. They're supposed to do well. Like that Chris Rock stand-up. I take care of my kids. You're supposed to take care of your kids, stupid. It's like stocks are going up. They're supposed to go up, right? This is the time that I ain't never been to jail. You're not supposed to go to jail, you dumb motherfucker. It's such a great skit. Shout out Chris Rock. And this is like that sort of environment. Like stocks are going up. They supposed to go up, So in my opinion, this is all perfectly normal. It is Crypto Fridays after all. Let's zoom out at what's going on in the crypto markets. To me, it's more of the same, longer term, bigger picture. We're above key support, right? We're above last summer's lows or the lows from the last year, let's just call it. And that support that we've seen over the last year used to be resistance back in late 2017, early 2018. So in bigger picture, long term, in my opinion, I think you got to own stock. I think you got to own stocks. That too, Freudian slip. I think you got to be long cryptocurrencies, Bitcoin and Ethereum in particular, if we are above those former cycle peaks from late 2017, early 2018, and we are. So great. But now short term, if you punch up slide 8 here, short term, Bitcoin is stuck below overhead supply. This is a perfect example of that multiple time frame approach. Bigger picture, longer term, Bitcoin and Ethereum look rock solid. They're above key support. Terrific. Now, when you look closer for more tactical opportunities, Bitcoin is struggling where it should struggle, right? At that former support turning into resistance. So, for me, I think that this churning likely continues. I don't think it's a bad thing. This is demand absorbing overhead supply in my experience. That's what this looks like. And if and when we ultimately take out 31,000 to the upside, to me, that's the signal to really add to positions. If we're able to do that, Straz, I've said it before, I'll say it again. Not only do I think Bitcoin retest that 65, I think it rips right through and goes straight to 100, 120 on the Bitcoin. And you guys know me. I'm not Mr. like, oh, this is a triple, this is a 3-bagger, 4-bagger. I don't really talk that way. But in this particular asset class and the way that it's setting up, I think that's the upside. I really do.
I think it's fair to say if it's going back to all-time highs, it's probably not stopping at the old all-time highs.
What I'm thinking, we retest that level for the third time. Maybe we struggle in the 60s for a few weeks, maybe even a few months. I don't know. But I think that's just just a little break on its way up to 100, 120,000. I mean, that's, because when you get 100, you normally see 110, 120. So I think we extend. We got some Fibonacci extensions taking us up there. So that's what I'm looking at. A lot of the other altcoins, we could go one by one if you'd like. I'm not sure if there's any in particular that you want to talk about, but they just don't look like this. These are, we're sticking with the strength in these names for sure.
I have less to say about cryptocurrencies and more to say about some of these crypto stocks.
Okay. Are we gonna go there, or are we going to
wait
for another segment?
There's a question from the chat from Nipoon. Hope I'm saying that right.
Yep.
Basically, it's do you make your move now, start building a position now, or do you wait in Bitcoin?
No, right here, 25. Come on. That's the base breakout level. What's wrong with that? You want to wait till 30? I think you buy it right here at 25. You're getting a nice retest.
Listen, I'm in I'll be adding to positions on a breakout. If you're not in, I don't see a problem with waiting for a breakout. I also don't see a problem with having a starter position and adding to that on the breakout. I don't think there's a right or wrong way to do this, Strazza.
Listen, the reversal is in. If you go back to the last chart, right, the 200-day moving average is now curling higher. Like, this was a prolonged base. We broke out. We retested it. Even if you bought weakness back in Q1 before the base breakout was completed, you've been rewarded. I think it's fine to buy weakness in crypto here because I'm confident that the trend is now higher.
Yeah, you're confident the trend is not lower, you mean?
I'm confident it is now higher.
It is now higher.
Yeah.
Oh, okay, yeah. No, I agree. No, I don't hate this trade. I probably shouldn't have pushed back as much on Strazza's point, buying here. I don't hate it, but you're buying it against 25. So if you see a 24 handle, all bets are off tactically.
Agreed. I don't want it below 25. If we're back in the box, yeah, totally. So
show the chart with the days above the 200-day moving average on the BTC. Yeah. So you could see that we are now 148 days above the 200-day moving average. Not a bad sign to Strazza's point. Not evidence of a downtrend. Probably leaning towards an uptrend. It's got to get going soon, though. Got to get going. Let me see it. I got to see it.
Yeah.
Maybe that dollar weakness maybe finally gets it going. We saw some dollar weakness yesterday.
So, all right, Crypto Friday.
I got a ton of dollar weakness.
So, because of Crypto Friday, I know we've done a lot of this Coinbase, Binance, SEC news. Gary Gensler was on CNBC the other day. Did you hear his comments?
Do you think that I heard somebody's comments on CNBC? If you had to guess, do you think?
People are talking about it. People have been talking.
Not to me, I guess. All right. What did he say?
Yeah, Strazza, I also didn't hear it. So can you just enlighten me?
No, that's what I've been at work. I've been here, so don't worry. I've been monitoring all this stuff for you. Happy to help you.
We were having boozy lunches.
I'm having a boozy lunch today, I think. I'm getting out of here as soon as the show's over.
Spencer's like judging me. He's like, really? You're going to order an entire bottle of sake? Yeah. You're not?
Dude, the best lunches are the lunches with JC. All right. That's one thing I know. All right.
My reputation precedes me.
All right. Listen, let's talk about crypto. It's Crypto Friday. We'll talk about your food later. Okay. Gary Gensler came on CNBC. He said, "We do not need another digital currency," referring to Bitcoin. "We have 3 digital currencies: the euro, the yen, and the US dollar."
That's what he said?
This has gotten crazy. What that tells you, and I'm totally stealing Howard's talking point that he made the other day. I was on the Trends with Friends show. That was great.
Oh, who's big time?
But he nailed it. Howard totally nailed it. This is a political issue now. It's not a regulatory issue. This is the SEC protecting the U.S. government and saying the U.S. dollar is going to be the digital currency. Bitcoin's not going to compete with it. This has gotten real.
Well, wasn't this like a bipartisan sort of situation?
But
it still is what you're saying.
Like, Congress wants it to be regulated. I think that's bipartisan.
Doesn't everybody want it to be regulated? Don't you? Don't I? I think I do.
Hell yeah. So Kathy Wood was on this morning and made a great point. I was just listening to her before we came on here. She said because of the election year, there's going to be pressure on the candidates to force some sort of regulation, and that we might see something start to come out of it. Because you're right, Congress is pro-regulation. They're saying to the SEC to do something. You remember when he was on Capitol Hill? That was embarrassing. So it's going to be interesting to see where this goes, but it's totally a political issue now. They are trying to block Bitcoin. They're trying to block crypto. They do view it as a risk to the dollar hegemony.
What's a dollar hegemony?
Just means that the dollar is a big deal.
Big word from Strazza today.
Hegemony?
Holy cow.
What is this word? Hegemony? Is that an SAT word?
It is. I don't know. It's been a long time.
It is. I think it's pronounced hegemony, but yes.
Hegemony? No, really? I botched it? Hegemony. Leadership or dominance, especially by one country or social group. US dollar.
But it's also referring to the fact that the people, whatever is being dominated or whatever, does not realize that they're being dominated. So the dominator is doing it without in a underhanded way where you don't realize that you're being owned.
All right.
Is Tesla considered a crypto stock or no?
Yes.
It is.
No.
Tesla.
No.
Well, we're gonna pretend it is anyway. Tesla.
Wait. Oh, I'm sorry, Steve. Did they sell their Bitcoin?
Dude, yeah, they don't have it anymore. And even if
I'm
they
sorry.
did,
Stop. Listen, it's in my eyes, it's a crypto stock and it's Crypto Fridays, so we're gonna go with it. Tesla is up 14 out of the last 16 days in a row. Did you know that?
I mean, the chart looks great. I just looked at it in the deck. I did not. Let's take a closer look at this. Throw the
Can
chart
you
up.
imagine being short this thing? Like, what kind of serial killer do you need to be short this thing?
Dude, I mean, does this chart or stock trend better than any other? I mean, when this thing gets moving, good Lord. You saw it off the lows last year, a couple down waves, and just when it goes, it goes.
Does ARK own a ton? Because it looks a lot like the ARK.
This glare is driving me crazy.
Why do you have so much glare?
I don't know. I had the blackout shades going, and then you guys are telling me my lighting's bad, so now
Your lighting's good. Your lighting good.
Yeah.
So hold on. So listen. So the Tesla and the ARK, they look very similar. No.
Tesla is the largest holding in ARK, I believe.
Still.
It's like 10%.
Yeah, forever, JC.
Kathy Wood was just. I keep calling out Kathy Wood. She's great. I love ARK. Was just buying the dip in Coinbase, and they were also out buying the dip in Coinbase back in March or April, was it, when the Wells notice was issued? So she's still a believer.
I mean, the market seems to be also. They knocked it down early in the week, right? And it's been bouncing back over the last few days. The market seems to be a believer.
Who has time for this? Look, it's opportunity cost. We made our money. We made a nice trade in a short period of time earlier this year. This thing's just a mess now. I'm not hanging around for this.
You're not interested in hanging around, huh?
No, I mean, would you?
I'm not in it. No, so the answer is no. I'm not interested in hanging around either.
You guys want to talk about earnings?
Hell yeah. What's moving?
Yeah, I do. But 1 second. I want to get your guys' take because I called today's show, we're in a bull market. Did you guys know that we're in a bull market?
You know what? Want me to give you one for that? We're in a bull market. Let me give you one chart. Chart 26. The most new 52-week highs, large cap tech sector, since 2021. Now, everybody probably already knew that was the case. Not surprising. I'll give you a surprising one. Chart before it, short-term new highs, because you got to start somewhere. Financials. Most 21-day new highs, so that's like a monthly new high, since last summer.
Wow.
Here are your market leaders over the trailing month. Did you know, JC? Banks. Banks are leading.
I was promised a banking crisis. So the fact that all these bank stocks keep making new highs is some bullshit. I was promised a crisis.
I think it came and went already. We're getting, I think, no hikes priced in unless it changes every day. Fed funds futures are such a mess right now, but I think no hikes priced in. If they don't hike again, you're probably not going to get another bank failure. It seems like, everything's settled in this space right now, and financials are ready to go.
Can we get slide 1 in there? Throw slide 1 in there. It's just a good chart that represents the banking crisis of 2023. We got to get a t-shirt. I survived the 2023 banking crisis, right? Silvergate risk management or whatever, Silvergate loan officer of the month or whatever, March, right? Here's the bank nifty. So these are Indian banks making new all-time highs. My understanding is that stocks are expensive. These are the most expensive ones. My understanding is that we're in a banking crisis. Here's your bank index making new all-time highs. So, for me, if you think that we're in a banking crisis, you probably watch too much television.
My only point in bringing up the bull market thing was that we've, according to the textbook, and so you'll see it a lot today and yesterday too, we are officially by the book in a bull market.
What book?
Oh yeah, 20%. You didn't see
20% book.
Well, what book?
20%.
The book.
The media said so, JC. We're up 20% in the S&P 500. It is officially a new bull market. Everyone else finally agrees with you.
If you think that because the market's up 20%, that means we're in a bull market, you're an asshole.
Listen, I'm just telling you what I heard.
Like you literally need to check yourself into an insane asylum if you think that the number 20% means that we're in a bull market. Like seriously, retire, go to the mental institution, do anything but whatever it is that you're doing right now. Like that is criminal. If you think that the stock market rallying 20% off the lows, I'm going to say it again because I don't care. You think that means we're in a bull market, you are an asshole.
Just to be clear, your point is that we've been in one. This
For a
isn't
year almost.
JC, I think I found something for you. Maybe it'll be like an early birthday present. Can we throw this?
Man, my birthdays are coming fast this year, man. I'm already 41. I feel like I was turning 30 just yesterday. You're already like, you know.
All right, slide 25. What do you think?
What do we got? What do we got?
This one's for you. You wanted some gear? We'll get you some gear.
What is this?
50
First Republic?
bucks. I'm shopping the deals. First Republic, Banker Bro, sweater vest. I think you'd rock it.
I don't
well.
wear sweater vests. I'm not from Connecticut, dude. You wear sweater vests. You buy it. No, but you want to know something? I have for Chateau Fibonacci for the wine business. We have a First Republic account, and they keep emailing me. It's not JP Morgan yet.
Well, they'll probably keep the brand.
You think? No, 0 chance they keep the brand.
You never know.
0.0, Mr. Blutarski. 0.
Probably right.
No chance they keep that brand. Are you kidding me?
People
Did
don't.
JP Morgan keep Bear Stearns?
People don't pay attention. People will forget.
What was the better brand, Bear Stearns or First Republic? Come on.
Yeah, but that was different, I think.
How?
It was a lot worse.
Both of them blew themselves up.
Yeah, people were like jumping out of buildings. I think it was a little different.
That was a real banking crisis.
Yeah, that was, yeah.
Anyway. Okay, and then so over the last couple of days, I was a little bit out of commission. I mean, we were around. I was checking in on things. Anything really stood out? Anything real surprising over the last couple of days?
No, it's what the big development was this week. The major takeaway is follow through on the rotation that began last week. Look at the candles in small caps. A lot of people were talking about these ugly bearish candles in the NASDAQ or growth or tech from Wednesday. There's a bullish candle for every bearish one from Wednesday. Go look at small caps, go look at the cyclical groups, value stuff. So the stuff that we want to work and that we've been dying to see rotation into, you got the rotation, you got these little tactical breakouts. Now we're getting the follow through. Listen, the Russell, if you look at, IWM versus SPY or any of these, small versus large ratios, one of the biggest moves on a short-term rate of change basis, anywhere from like 1 to 5 days, or a trailing week even, one of the biggest moves in favor of small caps over large over the past several years. So you're getting like that momentum thrust. Yeah, in this ratio, on a relative basis, favoring small caps at this key level, right? As the absolute trend is really firing too, it's all coming together for smalls. I think this is the place to be as we head into the back half of the year.
I have a chart.
I know you do.
Punch up slide 2 there, Fonz. Look at this base. Come on, Strazza. This is right up your alley.
I like my bases cleaner, man.
You like them cleaner?
Yeah, I want the year-to-date highs to line up with the August highs. Those are my favorite ones. It's so clean. It reinforces the importance of that level. I know where I'm wrong. Yeah.
Strazza's very bougie with his bases.
Here's the thing. We can be bougie with the bases right now because there's so many of them. We have so many great options. Like, just go find the best ones.
Hold on. Let's tell the folks what's going on here. So we're looking at support in 2021. That was that bottom, right? $60 billion software stock, snowflake, right? And then over the last, really since the first half of last year, that base was starting to build. You see this. I mean, just go, growth index by growth index, the Dow Jones Internet Index, the semiconductors, the, technology, small cap growth. Just go, one by one by one. You know where you're going to find? You're going to find a lot of these smiley faces. You're going to find a lot of these bases. Yeah. And you know what else you'll notice is that in almost all of these cases, the resolution is to the upside, Mr. Strazza. Mm-hmm. So to your point, this one might not be as clean as some of the other bases, but if you're seeing how all these other bases are resolving, are you going to bet that this one's not going to do that?
No, I think you have to look at all of these bases. I was talking to somebody yesterday. I was saying you can basically start to jump the entry in some of these bases, right? Like I'm cheating. Tell me what you think about that. Somebody was asking me about a base that hadn't yet broke out. And I said, you know what? At this point, you could treat it as if it's going to break out. Is that bad?
I like those 2021 lows. If we're call it 185. If we're below that, it's messy to your point. If we're above that, I don't hate it. I got to tell you, I don't hate it. You know, over the last couple of weeks, we've been really moving into some of the, you know, the potential rotation into small caps and industrials. That has certainly worked out in our favor. I remember getting a lot of pushback from Sean and Strazza in our team meeting about, you know, buying those small caps and Caterpillar. But to your point, even though you didn't agree that the charts looked great, you couldn't deny that the risk reward was very much in favor of the bulls and Caterpillar and small caps, right?
You know, it was a real tough one because basically what I was saying in that meeting was like, we haven't seen it yet. And in fact, we've been down here for a long time and these things are just not catching rotation. But at the same time, we were saying, if this bull market is real, these things have to catch some rotation.
So it's a reverse engineering of the bull market and saying, if this is a bull market, then this is what's going to happen.
Yeah.
As opposed to, oh, the technical analysis book says that, you know, right? Like, I don't know what these books are that people are talking about. Like, Spencer's like, the book says 20% rally is a bull market, right? Like, what book? Like, I don't even know what, like,
the book
I've ever read.
I was trying to be facetious, man. The point is the media is saying we're in a bull market as of yesterday's close.
I thought we were in a banking crisis. How are we in a bull market? The media tells me we're in a banking crisis.
I got to take this question. This is a great question. Throw it up. Strazza said continuation patterns are more powerful than smiley faces. I didn't say they're more powerful. I said they are more likely to result in automatic reactions higher and not get retests. They're higher probability patterns. I'm talking about high and tight bull flags, JC, the short-term bullish pennants. If they're in the right, you know, longer-term trend, they're highly reliable patterns. Bases, we've seen it all the time, especially earlier this year and late last year. They'll go, they'll fail back into the range. They can take a lot more time. That's what I was saying. You're more likely to get that quick trade. They're great trading patterns, is what I was saying.
Yeah, you know, because remember, we know that asset prices trend. So we know for a fact that there's a higher probability that a trend is going to continue to move in that direction than completely reversing. And a base and these smiley faces are essentially massive bearish to bullish reversals, right?
That's right.
These are reversal patterns. They take a long time, right? They're, you know, I don't want to say less reliable. They're just different, right? They're apples and oranges. And a trend, if you're seeing a consolidation within an ongoing trend, there's a higher probability outcome that trend's going to continue. And if you're going to fight that trend, you better have a good reason. So in the case of these bearish to bullish reversals that we've been taking advantage of all year, the trend has been that these are in fact bearish to bullish reversals and they break out higher. That has been the trend. So when you look around and I look at something like Snowflake, it's like, well, all the other ones are breaking out. So this one's probably going to also, and I will be a buyer above 185. We are very fortunate today, all of us. We have a special treat. David Lundgren in the house. Should we bring him on?
Yeah, let's go.
Let's do it. Hit it.
Yo,
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Lundgren.
How's it going, gentlemen?
I like that you're here joining us on Crypto Fridays. Are we
I
talking
know,
any
right?
crypto or are we talking traditional assets?
I'm a traditional guy, but I'm sure you're going to come up with something on crypto. But I mean, Bitcoin looks like a pretty good setup here, right?
Does it?
I think so.
What, against 25?
Well, yeah, what I'm referring to is this pattern that it's kind of putting together right now. I mean, you can't see my screen, but hold on a second here.
Throw up our Bitcoin chart, the short-term one, Fonz.
Yeah. Throw up the one against 25 that we were just looking at.
Feel like he must be talking about this base.
Is that what you mean?
If you look at the last bottom, it was 2020, of course, and we kind of came up
Zoom out to the
recent
long-term
highs.
one, Fonz.
Came up through the recent highs, and then we had a check back to the breakout, and it looks pretty similar to that. I'm not saying the same consequence will follow, but it looks pretty similar.
So former resistance from late 2017, early 2018, turning into support over the last year or so. This is what you're talking about?
So if you I don't know if you guys have a screen up.
Yeah, you see it?
Yeah.
Hold on. Yeah, there we go. Okay, so if you look at the bottom in 2020, which was basically the right side, it's a massive cup and handle. This would be like the massive cup side of the pattern. And you broke out through those highs, and then you had that check back. I don't know if you guys have a mouse where you can kind of point to where I'm pointing.
Yeah, the 2022 check back.
No, it's even before that. So if you're looking at early 2020, it's right around 11,000. Right, go to the right, go to the right, keep going to the right, go to the right, right there. Yep. That's what I think we have going on here. So you cleared the highs of the pattern, checked back to it, and obviously you still had overhead resistance to get through, but that's the nature of bull markets, is that they they keep everybody on the sidelines until you clear everything, and then
I love that the retest happened on like the worst crypto sentiment we've ever seen too.
Yeah. I mean, this whole thing bottomed when Sam Bankman-Fried hit the headlines. I mean, that was classic bottom action right there. The fact that the whole asset class was going down, nobody can understand why, and the market knew why. And the whole, I mean, you guys know this as well as anybody. I mean, 2021 was all about, if you're a trend follower, you were out of digital assets in early 2021, and then after that, you went on to see all the classic hallmarks of a bubble, ranging from celebrity endorsements and stadium naming rights, and Facebook changing its name to Meta, and Square changing its name to Block. I mean, those you can't make this stuff up. But it's not like that's the first time it's ever happened, and I can assure you it's not the last time it'll happen.
Throw up chart 31 quick, David. Now we're seeing it more like on a tactical basis, where in March Bitcoin, had this tradable low on the Silvergate.
Yeah, I love that.
Blow ups. And now maybe this is, something similar happening with the SEC suits.
Yeah, that's the difference between bull and bear markets, is that when you have it's not that pattern recognition doesn't work. You just have to be cognizant of the environment you're in. And if you're transitioning to a bull market, breakdowns, they're still a pattern. They're just called something else. They're called false breakdowns.
That's right.
and they trap in the bears. And then that's what it's all about. That's what sustains trend, is trapping bears. And so,
too, right?
What's that?
Some of the best patterns too.
They are, and the thing with the market, the thing with the stock market is I track the trend of individual stocks across 4 time frames, and if you just focus on the weekly time frame, if you look at charts that look like this, what you see here on Bitcoin, at the stock level, and you track once the stock broke down out of a pattern like that, what has it done since then? It turns out that right now it's about 90% of the stocks that have broken down out of a pattern are lower from where they were before they broke at the point of breakdown. So that still indicates, from a breadth perspective, we're still in a bear market. Now, there's a lot of things that are getting a lot better, but that's been one of the hallmarks of this bear market that's been kind of sustaining me and keeping me more. I'm definitely not bearish, but much more balanced. I run a hedge fund, and when I'm in a bull market, I cover all shorts. I mean, there's no reason to be short, right? It's literally a hedge fund. Like, when you're in a bad environment, let's put on some shorts to protect ourselves. That's what it's for. So I'm getting closer and closer to the point where just cover all shorts and gross up the long book and the names you like.
But David, I'm told that it's a banking crisis.
It is. It absolutely is.
With the S&P 500 making new 52-week highs every week, and the Nasdaq making new 52-week highs, and it's a banking crisis. We should have a banking crisis more often.
I have this chart posted on my site. Guys, I should have put it in a list that because I knew JC, I should have known you were going to talk about this. But it's a chart that shows back to 1980 all the major bankruptcies in history, and I forget what the number is, but it's something like 70% of them happen right after bear market bottoms. So the stock market goes down because it's telling you these bankruptcies are coming, this crisis is coming, and we're all going, what, why is the earnings are great, the valuation's this, and everybody's justifying why they should stay long in a bear market. And then when the news finally starts to come out and people are like, now I understand why, that's when the market bottoms.
So the bank failures were priced in late last year when we were bottoming. Market looks forward 3, 6, 12 months even.
But how many do you need to blow up? How many did we get? Like 4, 3 or 4, 5?
3 big ones.
I'd say, well, including global, because we had Credit Suisse as well, right?
Oh yeah,
So,
right.
I know. I mean, come on, that was a zombie. I think we're all surprised it took that long for that one.
Yeah, I thought they were gone already as it was.
Exactly. Touche.
David, you got to talk to us about this Wall Street lullaby. JC, look at this chart. It's on slide 32. This looks like something we're gonna like.
All right, talk to me.
Yeah. Okay. So I posted this thing on Twitter actually, and by the way, this is how I use AI. I went to what's the name of the site? Dali. I don't know if you guys have used this yet.
Yeah.
But I went to the website and I just said, create an oil painting of a trader sitting in front of his screens, laying back in his chair, sleeping, to present this image of basically Wall Street is sleeping. And you should check out this. It's on my site and it's also on my Twitter feed. But it's an amazing painting. But at any rate, the whole point is that I called it Lullaby on Wall Street because the market hasn't hit a new 52-week high, and by now it's got to be, 16, 17 months. But since having not hit a new 52-week high, it's also not during that bear market. It's now gone 6 or 7, or maybe it's now 8 months without hitting a 52-week low. So you're kind of like going sideways. This has only happened 8 times since 1970, and you can see them all marked here with the numbers. And the only one that didn't resolve higher was actually in the 2000 to 2002 bear market. So we had been in a bear market. We didn't hit a new low for 6 months during that bear market, but then we went and rolled over and hit another another low. That's the only time we did that. The rest of them all resolved higher. So I know it's hard to I'm a dyed-in-the-wool trend follower. I do not do anything that's counter trend or contrary to trend. But at the market level, when we're down 25, 30%, it's just like, man, you just have to stop placing bearish bets. Even though the trends look, they're perfect. Isn't that amazing? Am I talented or what?
That's crazy.
So good.
Right?
And I worked on Wall Street for many years, and I would often see traders and brokers asleep just like that, actually. And we would throw like little pieces of paper, try to get it in their mouth. We did that. That's real. That's true. Yeah.
That's fantastic. Thanks for pulling that up. Whoever did that. You guys are.
That's the Fonz. Fonz coming through in the clutch. All right, let's talk high beta, low volatility. Low volatility stocks, consumer staples, things like that tend to catch a bid when stocks are under pressure and bear markets continue to make new 52-week relative lows. The defensive areas, staples, utilities, even healthcare, just low volatility, all new 52-week lows every day on a relative basis. That doesn't sound bearish.
No, I know. I totally agree with you. If you actually look at this, you can see that, well, first of all, if you just look back in the history of the chart, and this is just a relatively short-term chart, but this is true through history, that as you can see, the red lines, the red arrows are periods where you can see these ratios are all going down. And so it's discretionary versus staples, high beta versus low beta, and copper versus gold. And all those red arrows are during stock market bear markets. So you can see these things, they're descriptive of bear markets. And so when you see these trends in negative configuration, if the stock market's not already in a bear market, you should be mindful that it's likely impending, right? And then the green arrows overlay with stock market bull market. So when these things start to turn, you should be mindful of the possibility that the market, in its infinite wisdom, the weighing machine that it is looking forward through all the headlines and saying things are getting better. And what I want to point out on this is that you can see these things bottomed in January, and they actually started reversing their trend before the bank crisis even made headlines. And what I think is most interesting is that we literally just had 3 of the 4 largest bank failures in U.S. history. And prior to that happening, so that was March 7th when it really started. So if we all know 3,800 has been major support on the S&P. If you came to me on March 6th and said, Dave, I know you think 3,800 is a really important support level for this budding bull market, but I got a little secret for you. Tomorrow, there's going to be a massive banking crisis, and over the next few months, there's going to be 3 of the 4 largest bank failures are going to be announced. Do you think 3,800 is going to hold? I mean, it wouldn't even take me 2 seconds to answer that question. No way. There's no way. I mean, I remember GFC. I mean, I was investing during that. That was a catastrophe, and this GFC all over again, right? But thank goodness I'm a trend follower. Thank goodness I don't care what I think. All I care about is what the market thinks, right? And the market absorbed all this data, massive headlines and scary headlines, and we tested 3,800 and held it, and here we are. So, and these ratios are starting to break out again.
I think.
Let me ask you this, David. Sorry, I'm stealing. Strazza gets mad when I steal all the questions for the guests, but Lundgren's here. I got to take advantage. I'm stealing the questions. So this is something that we think about a lot. This is sort of like what I think about, when I'm away from the screens, thinking about the market. you've got this leadership that we've seen all year in growth and technology. And then you've got like the initial leaders off the lows last summer that have really been the laggards this year, the more cyclicals, industrial, small caps. So when you're looking, as a hedge fund portfolio manager, are you looking to press strength, or are you looking to take advantage of that potential rotation? Maybe we've already been seeing it over the last week. Like, how do you think about that?
So I'm as I said earlier, I'm a dyed-in-the-wool trend follower, and I live and die. We all do. I'm just very much mindful of the fact that I live and die by the expectancy formula, which is how often are you right? How much do you make when you're right? Minus how often you're wrong times how much you lose when you're wrong. We all live and die by that formula. I'm just extremely mindful of it. And so the only way you get a positive P&L number on the left side of that formula is to make sure you have right tail events. And so that's, if you just need to be explicit about that. What's my job? My job is to try to capture multi-baggers if possible, right tail events, the things that actually make the index do good things, because most stocks in the index don't do good things over time. I have a slide on my site that shows that since 1980 to 2020, 42% of the stocks that have gone into and then later come out of the Russell 3000, 42% of them actually came out at a price lower than when they went in. That's the reality, right? So I don't care about mean reversion. I don't want to pick bottoms and everything else, because I'm mindful of two things. Most stocks don't make it. And if I'm going to win, I have to be in the right tail event bucket out on the right side of that distribution curve. And the only way you can do that, literally, the only way you can do that is to trend follow, because mean reversion is going to get you in and out, in and out, in and out all the way along. So when I look at all my work is from the bottom up. I look at equally weighted bottom up everything. So in my work, industrials have been the number one or number two sector for over a year now, and it's because it's equally weighted, right? So industrials. If you look at the what's leading in industrial, it's all industries and stocks that are tied to the new legislation that's coming out to kind of build factories out across the country. Industrial renaissance. If you guys want to call up a chart of the AIRR ETF.
Infrastructure, pollution, waste management, talking about stuff like that, right?
Right. And that's a new legislation that just came through the Congress, and it's really taking hold finally.
That's interesting.
And the other one was the CHIPS Act. So you put those two things together, and like semiconductors as well. I almost kind of view them as being industrial in many ways as well. And if they're building out factories,
throw chart one up there.
They're likely to be smart factories with software and chips and everything else. So that's the fundamental story. And then you say, well, what's leading? Well, guess what? That's what's leading.
Explain why. Like, why would you look at semiconductors like industrials? I love this point.
Well, they manufacture. Unlike software, where you basically produce it once and sell it as many times as you can. It's like research. You guys know that. Make it once and sell it as many times as you can. But manufacturing is different, and it requires factories and things like that. And so the point here is that I can't remember what nifty little acronym they put on it, but the Congress passed a bill that's intent on building out factories across the country, and the CHIPS was about onshoring chip manufacturing, et cetera. So when they build out these factories that have nothing to do with building chips, it's just industrial manufacturing in the U.S., those factories are likely to be smart factories, which benefits chips, right? So we have construction and engineering, materials, all those things that come into building out these factories. Those stocks are leading the market higher, and they seem to have a pretty good tailwind based on that legislation. And then chips on their own, I mean, they benefit from that, and they also benefit from the CHIPS Act, and they also benefit from AI.
We've seen so many building materials stocks come across our lists lately. Alfonso knows what I'm talking about. Whether it's like Beacon Roofing, I'm looking at some of them now. Vulcan BMC looks really good right now. You're right. I had no idea. I didn't put two and two together that this could have had something to do with the legislation, but that makes a ton of sense.
80% industrials on this AIRR, to David's point.
Yeah.
New all-time highs as we speak.
I thought JC was going to yell at me for mentioning fundamentals. And I actually do have to go wash my mouth out later because I don't typically talk fundamentals, but
I know, but David, I think we're all in the camp that fundamentals are what drives asset prices.
100%.
It's just that we don't necessarily need to know what those fundamentals are to recognize the trend of those asset prices.
No, I think the way I try to explain it is that the fundamental the market is the best fundamental analyst on the planet. That's why it's so hard to beat. That's why it's so hard to beat, right? And the other thing too is like these trends are all driven by fundamentals. I have a slide on my deck on my website that shows that if you look at 1 year periods, roughly half of what drives a stock, makes a stock do what it does in any given year, is valuation expansion and contraction. And you guys know better than anybody that that one of the best measures of sentiment is valuation, right? So obviously the very short term, and Charles Dow talked about this back in the late 1800s, is that the short term is driven by sentiment. And there's a perfectly good data-driven demonstration that that's true. But when you get out into 3, 5, and 10 year periods, it's 5% valuation expansion and contraction, and the rest of it is fundamentals. And 75% of that is top line growth.
Wow.
Before we let you run, I'm glad you touched on the sentiment. We're coming off from last year, some of the most depressed sentiment levels I've ever seen. We do a lot of sentiment work here.
Yeah.
I don't think that I've never found like any magic bullet, like golden indicator of sentiment. So I think we do a pretty good job of aggregating all the sentiment data. And I mean, we're talking about some really depressed levels that, in my experience, takes a long time to unwind, right? You want to touch on that before you run?
I think that's the wall of worry at the beginning of a new bull market and the slope of hope at the end of a bull market. And so the wall of worry is that's what it's all about. It's what sustains bull markets. And that chart that I mentioned that goes back to 1980 and shows the largest bankruptcies in history. Remember, like as an example, General Motors and there was another There was another large financial that went bankrupt after the 2009 bottom. I think Chrysler was in there as well. These are massive companies that went bankrupt after the bottom. And I think it was in 2010. This is how bearish people were and how afraid they were. In 2010, I think it was 2010.
The summer of 2010. Everyone thought that this double dips nonsense and all that stuff. Remember?
It's all what you remember most recently. It's recency bias. But Ben Bernanke went to to refinance his home and he couldn't get refinanced. That's how scared people were, right? And so that's all. I wouldn't be surprised if we have another bank that goes belly up and the market just chews through it and goes higher again because the market was telling you about that all last year.
I remember I think I was on Fox, and this was maybe like a month ago or something like that. And Liz Clayman's asking me about, First Republic, on how this is such a big deal. I'm like, Liz, First Republic is less than $1 billion. Microsoft was up $150 billion that day.
Yeah.
I'm like, we're talking about $1 billion company. Who cares?
Yeah.
Right.
Yeah.
I mean, that's, and the only reason that I was reacting that way in sort of the who cares, the market didn't care. The market was exactly right. Yeah, whatever. It doesn't matter. So if the market doesn't care, why the hell should I?
Bingo.
One more.
No more.
Stop it. This is a dictatorship. This is what
Who's
we're doing.
the boss here?
Dude, Lundgren sounds chippy and optimistic and positive, as do Strazza and I. Very quickly, 30 seconds before Spencer gets mad at me again. What are you looking for to be like, whoa, maybe I shouldn't be so optimistic? Is there something in rates? Is it a breadth thing? Is there a sector rotation thing? Like what are you looking for in the horizon that's going to be like, hit the brakes a little bit on your bullishness?
It's interesting. As I said, I have a hedge fund, so I'm long and short. And in a bull market, I have no shorts. And I'm saying all that only to restate that I do have shorts on right now. I still have shorts. It's a very small position, but I'm actually I'm very mixed. I'm like table pounding neutral is what I would call it. And so in that environment,
table pounding neutral. That's the first one.
But my long book is I'm long those things, those companies that we've talked about, that those themes and trends and leadership and whatnot. But I'm not fully invested yet. But I have a risk gauge. It's basically across 4 timeframes, and the quarterly timeframe is still not inflected yet. And there's so much more we can talk about as to why it hasn't yet. It's all breadth measures, and I'm sure you guys are detecting similar things. But when that ticks up, I'm covering all my shorts, and I'm just going to take the long book that I have and gross it up. I already own what I want to own. I'm not convinced yet that we're in the environment yet where you should just be long with no hedge.
Have your
That's it.
shorts been working? Real quick, David, you ruined it. We lost Kimmy anyway, JC, so I'm going to ask another question. Have your shorts been working, and do you get information from that? Like, in other words, if they're not working and they're ripping and you're having to cover for losses, like, do you eventually say, okay, maybe this is an environment where I want to be shorting in?
So the shorts have added alpha since I launched the fund. But what I do I mean, at the end of the day, shorting in long, although you can almost like take the strategy and turn it upside down, that's about where the similarity ends, because you have to behave differently. So we talked about right tail events on when you're long. That's what trend following is all about. There is no such thing as a right tail event on shorting. You can only go down 100% if you're lucky, right? So when
but
you're
don't
down,
you keep a margin requirement that, like it's more than 100% in terms of the mechanics of the shorting?
that is true.
A lot more than 100%.
It is true, but there's no 1,000%. There's no 500%. I mean, I guess it depends on how levered you are, but the point is that the skew is just very different. Like there's unlimited loss potential if you don't manage your risk properly, and then there's limited downside. The stock itself can only go down 100%, and that's usually not what you capture anyway. So when I'm short, when I'm down, when the stock is down 20, 30%, I'm actually covering the short as opposed to adding to it. And whereas if I'm up 30% on a stock on the long side, I'm like, should I be adding to this? It's just a different mindset.
You're quicker to pull the trigger. You don't get greedy with the shorts. You take the money.
Have to be.
So Kimmy went off to the trading room. If you guys are following Kimmy, get over there. She just hopped off. So with that said, David, I got another question for you. You and I were having drinks in Washington, D.C. a little over a year ago at this annual CMT symposium. We're talking about wine. We're having a great time. We were noticing, you and I, just how bearish a lot of people were. And while the bottom wasn't for like another month later, when the new 52-week lows list peaked in June, I think this was like late April of 22, there was just a lot of bearish sentiment at the CMT conference, just a lot of bears. We just had the CMT conference again a little over a month ago, a little bit more optimistic, but still kind of pessimistic, I thought the crowd was, no?
Yeah, no, I thought the big takeaway for me there was maybe I'm biased here, but I'm cautious about being too contrarian with trend following sentiment, because that's what in a bull trend, you're right to be bullish, right? So if they could be right, but what my big takeaway was how bullish everybody was on gold. It was like 90 something percent.
Everyone was on gold this year.
Yeah.
This symposium.
Everybody.
And,
great.
Yeah,
really?
It was. They did a live survey, and it was something like 94% or something were thought that gold was going to end at some level higher. And I don't know. I mean, I'd love to buy gold if it started trending, but it's not trending yet. And I think if gold is working, we have other discussions we have to have, because it's generally not a good macro read. And so
I know, but David, in the 2000s, I remember early in my career, I was a gold bug early in my career, proud. I mean, it was gold bugs were cool back then. These days they're the opposite of cool. But in the old days, they were, gold being Vancouver was partying. I was actually with gold bugs over the last couple of days. They're in a good mood. So 2003, 4, 5, 6, gold was doing great. Gold was actually outperforming stocks. Stocks were doing very well.
Not all stocks. I mean, that was the post bubble unwind, and that was
financials were doing well, right? Not tech, not growth, but financials, energy, industrials, materials. Those were the stocks doing well. S&Ps were making all-time highs, no?
And that's why gold was doing so well. So you're correct to say that. You're correct to say that it doesn't matter, right? What the fundamental, like I'll almost always say that when trends are inflecting, and I understand why, the trade's probably not going to work. Like when trends are inflecting, and I can't really tell you, like I happened to be at a hedge fund in 2002. We launched right at the bottom in October, which was a whole other story. But when we launched, this sort of comprehensive bottom-up, top-down technical process was like, you need to be long energy materials in emerging markets. And this is at the end of a 50% bear market. It's like, you want me to do what? You want me to get long energy and all these things that, blew up, and shouldn't I be long utilities and staples? But that's what the technical process was saying. And like, I didn't know why, but that's what we got long. And And later we find out that it's China, and it doesn't. You don't need to know it, because these trends happen through time. That as long as mankind has been trading things, these trends have taken place. And the point is that those trends took place 100 years ago, 200 years ago, and I wasn't even on the planet. So if they didn't need me on the planet then for them to happen, why do they need me there to understand it today?
Good lesson, David.
You know what
I
I mean?
really like that a lot. Are we going to steal that, Strazza? We're definitely stealing that.
That was good. We should show
All right.
No,
Listen, David,
no stealing among friends. We're all friends.
I appreciate you being here. You have an open invitation. David Lundgren has open invites to like our internal meetings. So this is nothing new. You're still open invite, always
Thanks,
invited anytime you want.
Nobody wants to come to our crypto meetings anymore, though. What's that tell you about sentiment? Nobody wants to come. Nobody wants to talk about it with us anymore.
Yeah, when Lundgren starts calling me for the link to get into our crypto meetings, start fading Bitcoin. Is that what you're saying?
I asked you for all, like, how do I get educated on all this stuff going on in the digital space? And you knew that was the top. As soon as I want to know, and as soon as I want to understand, that's the top.
Well, it had already bottomed when you started reaching out, no?
No. This was in the throes of the bear market.
Originally, but you reached out more recently.
I remember I had just looked at like 500 cryptos, and I'm not even sure if there are 500 left right now, but I couldn't find an uptrend.
Oh, there are.
I couldn't even find one uptrend, and then I jumped on your call, which is a great call, and I appreciate you letting me on.
Anytime, man. Anytime at all. I will let you know when I'm out in Boston. My sister just married a Bostonian and just moved out there, so
I like her
will
already.
be out there quite a bit.
Yeah, awesome.
Looking forward to doing New England things.
Great place to do New England things.
I love New England things in the summer.
Yeah.
All right. Awesome. Thanks, David. Appreciate it.
Guys.
Thanks, David.
Sorry, awesome. Spencer.
Hey, back-to-back interviews. Everybody who's watching, great interview again today. And if you didn't see yesterday's with John Roque, the last 2 days interviews have been killer.
John Roque, huge inspiration to me early in my career, for sure. A lot of things that you hear me say, sometimes like I'll be listening to Roque and he'll say something and I'll be like, oh shit, that's where I got that from.
You know what? I think we gotta rejig the schedule a little bit to let us run and not run into Kimmy's time. I don't know how if we move it up, but we felt the same way yesterday. Like we didn't even get through half our questions for John.
I know. Maybe we start a little earlier, maybe like an 8:50 or something like that, maybe.
So I think that's
all right. What do you think, Spencer?
I remember back in the day when you guys thought that a 10-minute interview was going to be too long. I remember that.
Yeah, he's right. Listen,
the market proved me wrong, Spencer. The market has spoken, and I was incorrect.
Not everybody gets 20 minutes. Okay, only our special friends.
Yeah, Lundgren special. Roque, these guys,
All right.
Much respect.
We got a couple of earnings here. Let's bang that out real fast.
All right, what do you got?
All right, let's do that.
Before you jump in, Spencer, Oreo Gameplay says run a longer show. We're on for an hour and a half every morning. We're talking about everything each morning, and then we're on throughout the day. So if you miss us, just tune in. Stock Market TV. We got other stuff going on. Right?
All right, let's start with this DocuSign here. Nice beat on the top line and on the bottom line earnings. Here's the calendar. You can see
what was the beat?
End of earnings season here. So.
You got the numbers for me? I got them here.
Yes, I do. 72 cents versus a 56-cent estimate on the earnings per share on the revenue. $661 million versus $642 million. Stock is up this morning. It's going to open higher. And it's, I think, their second consecutive profitable quarter.
Yeah, so they're literally profitable. That's, you know what? I got to be completely honest about this one. Spencer, would love to know what you think about this too, because I know that you have experience.
I would prefer if you were completely honest about all the other ones too.
No, listen, I don't think I know enough about these guys' business, because to me, it's really confusing why Adobe hasn't taken their business yet. Like, why do we even need a DocuSign? I mean, really think about the service that they're providing. They let you make an electronic signature, store something in the cloud, and share it with your colleagues. Why can't Adobe or Google or somebody do this better? To me, this is kind of like a Zoom problem. Like, it just seems like a commoditized service, and I would imagine they're going to have some competition. They are the industry leader now, I guess. Like who else does this, Spencer?
Well, Adobe does it. Danny Jassy uses Adobe.
Adobe does it. Pretty sure Microsoft has a thing.
Yeah. So what's so? I don't know. I don't love it. It's not for me. I don't like the business.
For me, it's just another good example of this base in these growth stocks that got beat up off the 2021 highs, that have been in this bottoming process since the first half of last year. This is like example number 297 that we could show. Hasn't broken out yet, but when you look around at its brothers and sisters and cousins, what are they doing? I think it breaks out ultimately.
Here's what I'll say about this one. I don't like the 200-day moving average. I have the 200-day moving average on all my charts right now. Michael Noss made a hilarious comment yesterday. He was like, JC's gone for one day, and these guys have moving averages all over their charts. But the 200-day moving average, back to the chart, is still sloping lower, which really tells you this base hasn't had as much time as some of the other ones, right? Once that starts to flatten and curl higher, it just tells you about the longevity of the base, and it's a nicer launch pad, the more price memory you have down there in the base. What do you think about that? This one's a little young. It's not as ripe as some of these other bases.
I like the ones that have already broken out better than the ones that haven't, right? Showing that relative strength. This is a relative laggard, right? So I don't love that, to your point, not to get all fundamental, but, what are they doing that other companies can't, I'm surprised they're profitable. I thought these were like unprofitable tech stocks. No?
Me too. That's what I'm saying. I don't understand their business because clearly they are doing well. NIO next. So this is a Chinese EV maker. So you probably can't trust any of these numbers, but read them to us anyway.
There's zero chance we can trust the numbers, but let's just go with it.
No. Yeah. And, okay. So maybe he's right. Maybe he's not. It was an okay report. Their EPS came in 3 cents below the estimate, 36 cents versus 39 cents. But it did improve. It did improve year over year. Revenue also came in a little bit light, but I think year over year the numbers were looked better. Anyway, to Strazza's point.
Below 10, I mean, there's nothing to talk about here. 10, $11 below that, you leave it alone. I mean, this thing.
Above it, do here. You scoop and score. I don't know. Better setups, far better charts.
Could be a scoop and score, certainly. Yeah. I'd rather be a buyer above 11. And I'd rather be a buyer. There's 0.0 chance that I'm a buyer of any kind below 11. So, above 11, I don't hate it. I don't hate it. I kind of like it. I'm not gonna lie. Kind of like it. Above 11, we're nowhere near that, so it doesn't even matter. Let's see if we can get back above those former lows.
Is it time for recess yet?
No, it's time for what's moving. We got some movers here, some news-based movers. Let's
Strazza, is this Chinese EV company boring you? Is this not sexy enough for you?
The first stock I ever bought was Build Your Dreams, BYD, which is a Chinese EV, and I bought it because Warren Buffett was in it. I was in high school still, I think. We're going way back. And I sold it at the lows, and I think he's up like 5-10x on it now because he held it.
How's that make you feel?
I think it was a great lesson. Dude, I was like 18, 17. So, yeah. I'll add, it was on the pink sheets, and I'll never forget I paid $50 in commissions, and I thought it was so ridiculous.
That is ridiculous.
Yeah.
What's pretty ridiculous is Japanese Nikkei keeps on moving, huh?
33-year highs.
Yes, sir.
Kind of bull markety stuff there.
Yes, sir. DXJ, new all-time highs. Toyota's making moves now also. You saw
that? Sean's been loving this Honda motor. HMC. We're going to talk about cars. Spencer, give the intro. We're talking about cars. Honda motor looks so good, HMC. And we had big news yesterday between Tesla and GM.
Yep. So GM is actually copying Ford in this regard, where they're partnering with Tesla, and they're basically, if you have a GM electric vehicle, you'll be able to use Tesla's charging network to charge your car. Also, GM's going to be installing their own charging ports that are provided by Tesla.
So GM installs them? Why wouldn't Tesla install them if they're Tesla charging?
Basically, because Tesla has the industry standard charging station, and GM is going to create their own charging ports that are basically Tesla charging ports.
Okay, so GM to use Tesla charging network joining Ford. This is a big deal?
It is a big deal because if you think about the how would you phrase it? The fractured nature of the EV industry, there is no universal charging network.
Okay, so
Tesla's
basically, if I understand correctly, regardless of what kind of EV I'm driving, if I'm driving down I-95, wherever I stop, whether it's a GM or a Ford, all of the charging stations will be the same. So we're trying to make like a one homogeneous type of like
well,
charge.
that's what we're moving towards. We're not there yet, but we're
Okay.
getting there because remember, there's different types of EVs, right?
Just like any car could go to the gas station and get gas. That's how it really should be, right? This has
Right,
to be
right. So this is and remember, GM and Ford produce way more EVs than Tesla does, right? Or they're going to. So, because all their cars are going to be EVs, they've said so.
You're a pretty big Tesla bear, huh?
No,
You
no,
are.
I wouldn't say. I mean, I would say I'm a skeptic. I don't know if I'm.
So let me ask you: do you think 5-10 years from now we'll look around and say, "Wow, the majority of these cars out here are EVs, but they're not going to be Tesla EVs"? Like, where do you think we're going 10 years from now? Because it's hard for me to imagine a situation where the majority of people are not driving Teslas because just the quality of the product is so good. It seems.
Maybe. I mean, I've been wrong on Tesla before. It definitely Tesla should deservedly gets credit for single-handedly creating the EV category, basically. At least in America. But kind of like how Netflix has a dozen competitors now.
Yeah.
Tesla has that too, right? Everybody kind of caught up to Netflix. Netflix had a great head start. Tesla had a great head start. But
I think what they do is a little different. One is making like a beastie machine. The other one's making shows and movies.
I mean, look, I've driven a Tesla and it was ridiculously cool. It was
Yeah.
very cool. Loved it. But I guess it's also a thing of like, again, having a universal charging network sort of creates a rising tide that probably lifts all EVs, right?
Sam Biggles
So-
said Tesla needs to make a camera for Spencer.
Hey, listen, I'm not home today. I'm actually at my sister-in-law's in Baltimore. So thank you to her for letting me use her computer. But I will have a camera on Monday. How about that? Anyway,
So this is cool news. What else? We've talked about Tesla a lot on here.
yeah, GM though. GM is up on this news. Just to give you an idea of the power of Tesla. If you pull up that GM chart, you'll see it.
Yeah, it's up nicely.
Yeah.
Faith a little bit, still 4% on the day, and Ford in sympathy too. Ford's got an interesting pattern here. Love to throw the chart up. Ford looks like it's
Do
ready to
we
go.
have the GM chart? I think we do. Maybe we don't. Okay.
The other one's
What else did I have today?
Looks
I
like
think
small caps, right? The GM chart.
yeah. You know whose chart still looks far better than Tesla's? One automaker. Who can name it?
Honda.
No. Sports car.
Ferrari.
Yep.
Race. Punch up that GM chart on slide 1 there, Fonz. So you can see that. Looks like small caps. Doesn't it?
Yeah.
You know? Here, we'll throw up the Ferrari chart. You get new all-time highs. It's the next chart right after GM there, Fonz.
How interesting is it, JC, that David, what he's doing is really similar to us, right? Where he's bottoms up and he's literally just starting with the strongest stocks. And he said he's finding so many opportunities in industrials. You've seen the names coming across our scans too. There have been tons of pockets of strength in industrials, even discretionary too. Like we always talk about, industrials and discretionary are really, really broad sectors, right? There's a lot of different stuff in there. And there have been some, insane pockets of strength that if you look at the index level, XLI, you can't see it at all. Oh, that was interesting.
But on an equally weighted basis, a whole nother ball game.
Equally weighted industrials looks better than large cap industrials.
Since the market bottomed last June, almost a year ago next week, when the new 52-week lows list peaked, industrials on an equally weighted basis are up 25%. Consumer discretionary is also up 25%. So it's discretionaries, industrials, and tech right around 24%. Those three sectors really leading the way. And then there's a big drop after that. Healthcare coming in, rounding out the top four. But when you go back to when the market bottomed almost a year ago, industrials and discretionaries, like,
Yep,
that doesn't sound like bad market breadth to me. Like, what do people talk about bad market breadth? Like, what year's market are they looking at?
Yeah, so he's look, so David just shared with us his current sector ranks based on breadth and relative strength. He's got industrials, it looks like tech, discretionary, materials, healthcare. It's really interesting. Yeah, we could have done another 10, 20 minutes with David. We'll have to have him back soon. So I was mentioning something really interesting to you yesterday. We're getting this rotation into small caps. I'm really interested in small caps. I think there's going to be a lot of opportunities there. So my mind is already thinking which groups within small caps. I quizzed you yesterday because most people wouldn't answer this correctly, but what do you think the strongest subsector or sector index within small caps over the trailing 1 month is?
My guess was banks. The answer is tech.
It's tech. Financials are second. So financials are up about 10% over the trailing month, small cap basis. Tech is up 16%. Like, that's where the rotation's going. It's going into small caps, but the same kinds of stocks as we've seen the large and megas, right? It's been growth, it's been tech. Now we're moving into small tech. I think that's really interesting.
And then on a cap weighted basis, let's see. So on an equally weighted basis, we talk about discretionary and industrials about 25%, and the technology's right there too. And then on a cap weighted basis, you're looking at technology over the last year, 36.5%. So on a cap weighted basis, technology definitely the leader since the market bottom last summer. Consumer discretionaries at number 2, up 22% on a cap weighted basis. Industrials also up 22% on a cap weighted basis. And then communications up 20%. These are very offensive sectors that are leading the way. So when people are talking about defensive rotation and bad market breadth, I guess I'm just not seeing it. I'm seeing the exact opposite. Low volatility names, staples making new relative lows, right? David brought up the high beta, low volatility ratio. I mean, you're seeing high beta outperforming. Like, that's healthy, no?
I got one for you. Let's throw this up. Yeah, it is healthy. You know what I thought was interesting? I wanted to ask him too. Do you weigh copper gold less in something like that? And does it speak to a different kind of risk?
I was going to ask him too, if the copper gold is so much of a stock market gauge as it is an interest rate gauge.
Well, can we ask Ian Cully?
Yeah, bring him in.
Because we got Ian Cully here, head of FIC at All Star Charts. Let's get
bring him in, run the bumper, and then throw.
I think Ian's got the hottest bumper on
What's up, guys?
On an individual basis. I think it's the hottest bumper. No,
I like it.
I don't even have one for me, and I don't think Strazza does either. That's some bullshit.
All right,
it's your show. You guys don't need a bumper.
No, I don't have.
I don't want a bumper.
I get no love. I'm barely even in any of these bumpers. So look at it's true. Consecutive up weeks for ARK. This is speculative growth. These are the riskiest tech stocks, riskiest growth stocks in the market. We're going on 6 consecutive up weeks. You're going to get a new closing weekly high today if this candle sticks. Highest high since September on a weekly basis, so 9 months. It's not exactly bear market behavior from some of the riskiest stocks. And this goes right in line with that small cap tech outperformance, does it not?
Hold on. We have the head of fixed income commodities and currencies of All Star Charts, Mr. Strazza. I don't know if you heard. And I want to ask him the question about rates, right? So, when you're seeing ARK doing what it's doing, to me, what is that saying about rates? It's saying lower rates, right? You look at copper gold, what's that saying? It's saying lower rates.
Lower rates, yeah.
Talk to me about whether the copper gold ratio is pointing more towards the direction of rates, or is it a stock market gauge like David, or is it both?
I think it's
both.
both.
Which I think Lundgren would agree is probably both, but I want to hear from you.
Yeah, I think it's both. And, lower rates doesn't have to mean rates are falling off a cliff. I mean, look at the 10-year yield. Yeah, it's chopping sideways, but we have a series of lower highs. So it's kind of trending lower within a broader range. So
it's not higher.
It's not higher. Yeah, it's not higher. Exactly. And what's really interesting though, when you start talking about ARK and these speculative, areas of the tech space breaking higher, I mean, look overseas, look at Vietnam, look at ARGT, look at Argentina breaking out and like, it broke out of that big base, earlier this year, but it's really, it's decisive now. It's really sticking that breakout, hitting new all-time highs earlier this week. We talk about rotation. I mean,
nobody's talking about Argentinian equities. I can't believe it.
No, because there's a lot of talk about rotation, but people are leaving out the fact that it's global. Yes, it's happening here domestically, but we are getting some sweet rotation internationally too, to some of these groups that we've been looking to pick up the pace.
Argentina, talk about that strength in European banks. I'm told it's a banking crisis. You got Indian banks making all-time highs. You got European banks hanging in there. Great. Credit Suisse is gone. Nobody cares. European banks acting well, man.
Yeah. Let's think back to just a few months ago, right? The narrative, most people I was talking to, analysts, investors, look at these banks, there's a banking crisis upon us. The market's got to collapse. The market's got to catch lower. Like the market can't keep moving higher with this narrow breath with banks failing. Really, the way we should have all been thinking was, how incredible, how impressive is it that the S&P and the NASDAQ keep cruising higher? These stocks are making new highs, breaking out of bases while banks are blowing up and failing. We're having bank runs. That's what we all should have been thinking, right?
I mean, that was the message JC was sending on Fox that day. Everyone was freaking out that First Republic.
Ian was there in the green room.
I was in the green room. Like everyone's freaking out. It was like, it was pandemonium. And JC's like, who cares? Who cares?
You guys thought that was funny.
Yeah. And it rang true.
What are we doing with this title thing up here?
Is it?
I don't know, but I can't see you guys. I can't see. Yeah, there we go.
Okay.
Come on. What are we doing here? Amateur hour.
What's also interesting is emerging market bonds are outperforming U.S. Treasuries.
Is that usually a sign of health or deterioration?
It's a health. Definitely not deterioration.
Definitely not, huh?
And it's interesting to see that ratio bottomed just weeks after the new lows peaked last year. You were just mentioning a couple minutes ago. You get that bullish divergence there in the EMB-IEF ratio as the S&P 500.
Why don't you tell the folks why? Why don't you tell the folks why you think this is risk on?
I think it's risk on because emerging market bonds they simply carry more risk. So if investors are willing to go further down on the risk curve, and they're willing to purchase emerging market bonds to get that extra juice, then it just speaks to risk appetite. That's how I see it.
And if the world's falling apart, you think emerging market bonds are going to be outperforming the United States Treasury bond market, which is, I don't know, the safest place in the world?
Right. Exactly. So it makes sense to see that risk on, that risk appetite in the bond market start to spill over into the S&P 500 as it's challenging those highs from earlier this year, those August pivot highs, or last year, I should say.
Interesting. David Lundgren brought up gold. Everybody at the CMT conference, I think it was like 90-something% higher. 90-something% of the participants in the CMT Association Symposium this year thought gold went higher. Still haven't even broken out yet. What are your thoughts there?
They should do a survey of all attendees and email us after the conference.
He did.
Oh, okay. That's what he was talking about. Very cool. Well, I should read my email.
Yes.
Well, so, gold's just digesting overhead supply at a logical level. I mean, if you look at the charts, if you look at silver, if you look at gold, if you look at a lot of the gold mining stocks, I see a series of higher highs and higher lows, which from what I remember from CMT level 1, I mean, that's the base definition for an uptrend.
No, but you know how we talk about how the stock market's been pretty resilient in the face of that dollar bounce. Gold has not.
It hasn't, but it hasn't completely fell apart. I mean, it's still trading below above those 2011 highs. So it's still above the prior commodity super cycle peak. And, as long as gold's above that level, I got to give the bulls the benefit of the doubt. Path of least resistance is higher, even though there's a significant level of overhead supply at 2089. I still think the path of least is higher towards 2,500.
I like Yosul bringing up the DEM. This is the Wisdom Tree Emerging Markets High Yield Fund, making new 52-week highs.
Yeah. What is the EMHY is the one I was in earlier this year. How are these different, Ian? Because they look very different.
DEM is Wisdom Tree and EMHY is who?
Yeah, but look at how much better Wisdom Tree
iShares
than iShares. Wow. Got to look into the holdings of these two things because
I got to dig into that.
DEM, Ian, this would be a great topic. This thing's breaking out. I bought the wrong one. God damn, I'm bad at investing in bonds. Do you remember back in elementary school on Fridays they would give you like an extra 10 minutes at recess? Would your teachers do that?
No, my teachers weren't that cool.
Yeah.
Right. We would get extra 10 minutes to play football.
Throw it up. Ian, stick around for recess.
What are you trying to say?
Hit the bumper.
Let's go.
Sir. Trying to say.
I just want to say I love Baltimore. This is something I feel like people don't say. I feel like Baltimore gets a lot of hate. I'm a huge fan of Baltimore.
Okay.
Go up slide 1 to show you the hotel that I always stay at. So this is where I stay. This is it. You guys are laughing. But this was an old abandoned dock at the southern tip of Fells Point.
Wait, JC, I see your room. I think it's up there somewhere.
Yep, my room is there. So this is where I stay. Now show what the hotel looks like now. This was like maybe 10 years ago. And now show what the hotel looks like now, which is the next slide, Fonz. Just so you can see really how beautiful this thing is now.
Oh, wow.
They did a heck of a job with this hotel. And go back so you can see what it looked like before. Just so you could see night and day. Yes, exactly. That was from The Wire. My understanding, I never saw The Wire, but yes, I guess this was like the police station or something from The Wire or one of those shows. But yeah, I mean, this thing Greg tells me this was like a rat infested, just like terrible situation. And now it's this beautiful hotel. Thing is sweet, man. They have a great wine list. They got like this like speakeasy, like bourbon, whiskey room situation going on where I watched the Heat lose the other day, but that's another story. Yeah. Excellent lamb chops. And I had these gold bugs from Vancouver just buying me wine and lamb chops. It was fantastic. I just want to say, shout out to Baltimore. Don't hate and stay at the Pendry. So that's the name of the hotel, is the Pendry. Sagamore Pendry or whatever. Fantastic. People are like, no, don't stay there. Stay at the Four Seasons. Forget the Four Seasons. Stay at the Pendry.
Speaking of the Heat, Strazza, you gonna go see the Heat?
You going tonight?
How good of a show was The Wire? Yeah, I am. I'm deep value. I waited. I haven't even bought tickets yet. They came down like $300 after they lost the other night.
That's interesting. Deep value ticket. So hold on. So you're gonna go to the Heat game and the Panthers?
I'm not going to the Panthers game. They did win last night though. The moment to buy the Panthers tickets, I've been watching all week, would have been yesterday before the game because they won last night. So I'll bet they went up. Listen, I have no business there. I don't know anybody on these teams. I know nothing about hockey.
Yeah, but it'll be fun. It'll be fun.
Yeah. Listen, I don't know yet. I'll be there all weekend.
You should go. You should go.
All right.
If I didn't have any responsibilities, I would go.
Yeah, we'll think about it.
Yeah, stay at the Hard Rock. Hang out at the pool.
Staying at the W.
Listen, nothing says hockey like hanging out at the pool.
Stayed at the same hotel we stayed at when we went a few years back. Actually,
you and me went? No.
Mm-hmm.
You and me were in Fort Lauderdale together?
Or Dreamfield. My buddy Phil was with us.
Oh yeah. All right, cool. All right. We were staying in Miami, not in Fort Lauderdale.
No, I'm saying we stayed at the W Brickell. That's where I'm staying.
Yeah. W Brickell. Yeah. That's right.
Where should I eat tonight?
You're saying at W Brickell. Where should you eat? Dude, go to Garcia's. Get some ceviche. Get some tostones.
You love this.
You love Garcia's.
Yeah, this is the one I went to with you, right?
Yeah, we took the boat. Oh no, we didn't take the boat. We drove.
We didn't take a boat.
Yeah.
All
Take
right.
the boat. Yeah, that's what you should do. Go rent a boat, take it around, and take it to Garcia's. That's a move. That's my move.
So it's not stone crab season. That kind of sucks. I've never been.
What do you mean? Yes, it is. Sorry, it's not.
No,
Sorry, it's not.
When is stone crab season?
Starts in October.
It's when
It's
it's
October,
when it's
October
not
through May.
When
October
it's not
through May.
baseball season.
Yeah, it's
If
October.
it's baseball season, you don't eat the stone crabs. He's right.
All right, great.
You live in the Keys anyway. You got.
Yeah,
It's not like you're like going down to South Florida and you live in Michigan or something.
we'll figure it out. I'll be calling you on my way up. When I do drive up, though, I have made it my homework over the past 10 years to try like all of the Cuban sandwiches, anywhere from like Key Largo down, and I found the best one. Did I send you a picture of it last time, like a month ago?
I don't like Cuban
You'll
sandwiches.
love this. I'm going to send you a picture today. It is the best Cuban sandwich. Shout out La Nina in Marathon. You got to go. If you're ever in the Florida Keys, this thing just blows my mind every time. It's the best sandwich I've ever had.
The thing is about Cuban sandwiches, I would rather have any other cheese other than Swiss.
Dude.
I don't like pickles in my sandwich.
All right.
And if I had to pick condiment, it's not going to be mustard.
Listen,
Like for me, Cubans make better sandwiches than Cuban sandwiches. I feel like people forget that. Like,
stop. If I took you to
What are the ones with the crispy potatoes on them?
yeah, I'm going to get a Frita too.
Those are
Those
the
are
ones.
fritas. Those are
Yeah,
fritas.
those are the ones.
now we're talking. Now we're
Take
talking.
you guys to my favorite Italian
Yes, Alex knows I prefer pan con vite. Exactly. See, somebody's listening.
steak. I know that. If I brought you to my favorite Italian deli in Connecticut or New York, right, I probably wouldn't order the Italian combo. Like, there's a better sandwich there, but that doesn't mean it's not awesome and traditional and delicious. And you can't go wrong with it. That's the Cuban.
Well, fortunately, I don't give a shit about traditional. I give a shit about what I like to eat. And if I'm going to order a Cuban sandwich, it's not going to be a Cuban sandwich. Cubans make way better sandwiches than Cuban sandwiches. That's what it is.
The Heat are getting 4 points tonight. How are they going to stop this guy? And this guy is incredible. Man.
Zone.
They did well game 2, but he scored like 40 points, right?
Yeah, but only 4 assists. But he only had 4 dimes. So, if they can maintain the others, right?
He's a problem. I don't know. I'm surprised that it's only 3.5, 4 points. They're home, but still.
All right. Well, let's take some questions. A little cafecito. I appreciate that. By the way, NASDAQ Bobby is one of the better names that we have here. SoFi hitting new 52-week highs. Shout out.
SoFi chart is chart 4, and then let's do Valvoline quick. I know we've had a request for Valvoline from, I think, was it Nikki Boone's in the chat yesterday, and we didn't get to it.
Valvoline is VVV, right?
Yeah. So SoFi, we got the chart already. SoFi, it's been in the chat. Everybody's been talking about it. There's been a lot of buzz around this name for weeks now, and we said it's not ready. It's not ready. It's not ready. It's going. You're getting that breakout today. We don't have today's candle here, but if you go look at the chart live, this thing's going. It's taking out that AVWAP from the highs from late 2021. That's your level.
There's that base again.
That's it. That's the pattern. They should all look like this. And this is what I'm talking about, JC. See the August highs line right up beautifully with the year-to-date highs. So clean. I know that's my level. I like this one. I like it a lot.
Strazza's getting bougie with his bases, Ian.
Hey, I like a clean level.
This Valvoline falling apart, huh?
Oxy doesn't excite me anymore. NASDAQ Poppy just doesn't excite me like it used to.
What do you think of this Valvoline?
This is
falling
nice.
apart today. If it's above 37, I think it's fine, but it needs to. The buyers need to step in right now. Like, it's not like, oh, maybe next week. They need to step in right now.
I mean, look,
right?
this is a problem because you had the high and tight flag there, a nice bullish short-term continuation pattern at the upper bounds of a base breakout. So that short-term pattern is failing, and now the longer-term pattern is also at risk of failing too if we fall below that 35, 36 level. Yeah, this one's pretty ugly.
It's vulnerable. 37. The buyers need to step in ASAP. All right, guys. Listen, I'm out. I appreciate everybody being here. Spencer, any closing remarks?
Oh, I got all the closing remarks, JC. Haven't actually brought up any QR codes today, but there's links in the description on YouTube of this show for our free research, our chart of the day, our hot corner, our free daily options email. Check all that out there. I am the voice of God today. I'll have a camera on Monday, so if you missed my beautiful mug, you'll have that next week. Thanks to our guest today. Thanks to Ian Cully, and thanks to David Lundgren. Thanks to everyone in the chat. A huge, huge shout out to Ian Cully, Sean McLaughlin, Patrick Donawilla, and Giancarlo Mendez for manning the ship with Strazza these last couple of days while JC and I were gallivanting around Baltimore. So
It was
huge
lovely,
shout out.
Spencer.
They
It
did
was
a
lovely.
fantastic
I was
job.
going on mandates with Spencer. It was fantastic.
Great
Yeah.
job all around. We have such a nice team. And I just want to say it's so awesome seeing the chat this active. Thank you guys all for coming and watching and talking to us. This is a blast.
Have a good weekend, everybody. Adios.
See you guys.
Run it. I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah.